Good morning, everybody. So I'm doing this video now to prepare for tomorrow with ECB that should offer some action on the market, and I like to start with a clean chart, of what I call the blank page. This is a yearly chart, as you can see. So you have here all the yearly candles. On the long term, if I look at this chart with the Heikinach candles, what I'm looking here is a huge A, B, C that is looking up. I already posted that many times, but just to remember what we are looking for on the long term. What I like there is this double bottom. We had mostly on this bottom. We just missed this low for a few pips, but it means this low is still intact, and you see that 2016, 2017, 2022, now of course, has been holding in this area, and there is a reason for that, but we are not here for it. So if we look at this, what we see is what I already posted. We have here this big 2360 at 128.82, then the 38.2, 133.22, and so on till the 61.8 extension at 151.65. That's what we are looking, and that's very, very long term, because it's like a few thousand pips upside. If we look at the 38.2, it's 2,300 pips, the 50% 3,000, and the big 61.8 is 4,200 pips upside. Okay, so that's for the long term, but that's not what we are looking at now, because even with ECB, even if they would rate hikes like crazy, they will not fly 1,000 pips tomorrow, even if they could fly a few hundreds, which is what I see could happen. So this is the long term. Now we'll go a little bit inside the shorter term, and we will look at what we have now here, and we will look at the fibs and the retracements, the fibs and the projection I am looking at for now, in the actual market. So the first thing I've been using and I've been speaking about is, of course, this retracement here. Nothing a big science here. So we have stopped right there on the 2360. I need to reverse this one. Okay, so you see we stop on the first impulsive move after these lows here, which is the same lows I just spoke about. We stopped right on the 2140 fib, which is logical. Here we have two options. You can use this one or you can use that one. So on this, for now, I use this one, but we can look at different things, always looking for the most reactive fib now, because some fib have been able to be active in the past, but they are no more active now. So you see we had this impulsive move down, and we have this correction. So here, if we look lower, and that's what we could consider as a consolidation here. So this fib is a retracement. Then if we look at this impulsive, and this could be a consolidation of this impulsive move down, that's shorter term, and that's why I have the different views now working, and that's many are looking at this, and that's why they think euro is going lower, which is possible if something happens. But with this one, we see we are right on the 61.8, and this 61.8 is the first time we are touching it. So this 61.8 will be holding more than this. When we touch here, this 61.8 was not existing yet, because we didn't have this low, this high. So this one is a fresh, brand new 61.8. So it's important to keep it in mind, because this is a very strong area of support. Now, if we would dip, then 0.9850 is the next step, and then 0.90 for the one-to-one extension. Okay, so of course it's two opposite views. From a technical perspective, the actual indicator here, when we touch here, had a strong, very strong upside potential momentum and upside move, and that's why I went long at this bottom, and that's why I'm still on now, because I think this momentum is far from being over. It's a monthly, very strong setup that is usually done with several thousand pips. It doesn't happen a lot, it happens every few years. So that's why I'm looking for an upside. Then, when we think a little bit more, of course, on a monthly basis, on a monthly setup, we can still come back and have a consolidation here before we fly up. Still possible, of course. We can go lower, bump in some momentum and fly from there. Sorry, that's something which is possible and even likely to happen. But my risk-reward interest is on the upside, because on the downside there is not a lot of risk. Not a lot of risk, and the reward is much bigger on the upside with a few thousand pips. So when we have said this, we are now using this 2140 feet that we just spoke about. You see it better here. You see how precisely we stop there. If we look at that on the weekly or even on the daily, you see that the bounce we had from this bottom, which is the 61.8 of the indicator spot, we just stopped there on the 2140. Let me put it in extension and in line. Okay, so we see the field always. So you see how perfectly we went there. Of course, the next one, the 2360, will be another stop here at about 108.21, and then we have the big 108.40, just a little bit up there, that we spoke already a lot about. So for now, we can use here several things, which is what I've been using this morning when I took when I took a little long. I got paid some pips. So we go a little bit more inside now, and we are working on this swing up, the swing of the bounce, which is the swing I am looking at now. So what we have there is we have a retracement from this bottom to this high here. I change the color. It's the same chart I already posted, but I know some like to have updates of the charts, and that's what I mean. So if we look at this one, okay, to put it right on the top here, you look at this retracement, you see that we are now, and we have been bouncing this morning from this 2360 fib, we are now coming back on it. You see this area has been holding the price. We can look a little bit further in the 30 minutes chart. So you see it's a reaction area here for sure. We can look lower. We don't need to go to the 38.2. That would be possible because we missed it here. We missed it by a few pips, and ideally I would have loved to touch that 38.2. So that's something which is possible, and that's a level we have to keep in mind here. This 38.2 at 106.20 exactly from now. So when we have said this, we can see here very clearly on the Fibonacci candles. You see here we have a very nice impulsive move on the upside, like this one. Very nice impulsive move with a lot of momentum, impulsion. and now we are inside this retracement that I just showed. So as I say, we like, when we have an ABC, we like to see the 638 to the 50% of the 61. This is the area where we like to see a retracement. But the retracement of this impulsive can be deeper when the momentum is less strong. The strongest is the momentum in many occasions, the less deep we will pull back, because we have a strong momentum behind that will not allow a bigger pullback. If we have a little bit shyer momentum, then we can see a pullback up to the 61.8 and even sometimes up to the 76.40. But that's not the case for now. You see, we have been in this area already for several days, and we have not been able to look really lower. You see, now we are again bouncing from this 2360 there. Let me put the number right in the middle, because that's nicer. Okay, so you see we have here the 2360. So if we consider this impulsive move, then we can draw here an ABC, a nice ABC, very clean ABC we have there. So this is what we have. If we look on let's say on this one, you can put it like this, and in this case the 2360 would be there, or we can put it like this. If we respect the Fibonacci candle, and that's why we like the Fibonacci candle, because they give you cleaner, much cleaner swings than if you look with the regular candle here. You don't know if you take that one, this one, or whatever. So those ones are better, and they are they are better in drawing ABCs. So that is giving us another important thing, which is the 2360 here. I will put it. Give me 1 second. Take of this, put it smaller, and put them in orange. Okay. So this is what we have. This one is giving us some extension here, the 61.8, the 38.2, the 50%. So we will see when we will come back to the 2360 here, how we do or we don't react. Take off this price, giving too many information on the same chart. So we keep only the levels in the middle line. Okay, so the 2360 is very important. As soon as we will break above this one, we will come back on it at a certain time, probably pumping momentum, and from there we could fly. So we could just break, go to there, here, perhaps come back to the 38.2 or the 2360 and fly. That is only valid till we keep this low. If we go lower, of course this thing will change, and then we would come like this if the lows would be on the 1145 of the big retracement. Okay, so that's something that is not yet confirmed, because we didn't break above the 2360, because we didn't clearly pointed this level as a valid level. Look at that on the smaller time frame. So you see here, put it in blue, it's too light. We see here we have this ABC up there, and we have the 2360 there. You see, we have stopped it many times from now since we have this low. We have been using this level in several occasions, but at the same time it's the monthly open. So that's probably the reason why we have been using it, not the 2360. So what I need to see now to be able to validate definitely this ABC, pointing on a one-to-one extension at 110.67, which is a nice trip on the upside, but we need, as I said, to confirm that ABC is here, and the validate this ABC with a break above, pumping momentum, and the respect on the downside. Okay, so that's what we have now. from the big feed point of view. Then, of course, you can still, if you like, you can use even this swing here, like this small swing here. You could use this small ABC here, 1 hour ABC, and try to to have a projection on this one for an intraday trading, for example. It's something that I do a lot sometimes. So you can take this one and same thing here, same rules. We look for a confirmation of the 2360. So you see here with this very short time frame fib in green. Okay, so when you look at this one from now, you see this low is recent. This low was done today at 7 in the morning, so it's not validated yet. The 2360 has been holding. We can look on the regular candle, has not been validated yet. So we have this thing that looks like an ABC information. We can anticipate this formation, looking at the reaction on this 2360, then a break above, come back and pump momentum right on those levels, this one or that one, and then go for the 61.8 and then the one-to-one extension, which is at 0.740 more or less. And in this case, we would have broken back above this important 1140 fib, which is the retracement. Just to refresh your memory, the retracement of the complete swing up from the bounce. Okay, this swing up, this is the 1140 feet. So of course, sometimes it's a little bit crowded on the chart because we have too many things, but then you have to focus on the most important for you, which can be in this case this short time frame fib, or something you prefer depending on the time frame you choose to work on. Here you have the big one of the swing with the red one here, which is the biggest fib actually in use inside this move, with the 38 to come there. Okay, so this is what we can look at for now. The other thing that are important, of course, is the daily, the weekly, and the monthly open. They are always very reactive. They are always offering something, or we run the stops in some cases and just come back under it for the weekly, for example. But what is sure is to be able to see some acceleration on the upside. We need to break back above the daily open of today, which is here at 106.99, let's say 107. So if we see a break above 107, then we know we will be able to look for the weekly, the monthly open, and then this 1140 fib together with the ABC I just showed, which had the 2360 in that area. So this is what we can keep in mind, especially for tomorrow. Tomorrow we have this big move. So for tomorrow, so I will have to redraw this one again, unless I can get it back now. Okay, so for tomorrow, I will take out this green one, which is useless. So for tomorrow, we work on that. We can look at this 4-hour chart. So we have the big red fib, which is the ABC fib of this swing up. You can even, if you like, add the 1 to 72 extension of that one. That will give you a level on the upside in this area at 109.07, but we have a lot, really a big resistance to break in this area. A lot of weekly resistances to be broken to be able to look above 0.7. So we would need something very strong to have the momentum to break this thing here, this big rock here. So we can break it, and we will break it somewhere. It can be on the real rate hikes, or it can be on a good headline or comments or whatever, we will dig inside this area and then finally break. So for tomorrow, let's go back to what is the subject of today. So for tomorrow, we have this ABC till we keep this low. I repeat, till we keep these lows here. We have this red retracement here, and we have what I call the big mama here, which is this big retracement of the complete swing up from that I just show here, from with the top here in January 2021. So this is what we will look at. You see this 2360 right on this area here, above this confluence, above this consolidation we have there. And for sure, if we look on the other side, you will see it's right inside some important resistances. You see this 2360 here is coming right there on those bottoms. So it will be a very reactive area. Many will try to short it again, but we need to see what's happening. If we get a good momentum, we could break up to this 2360 at 0.825, and we could even get to this, sorry, where it is, to this chart that I have posted in many occasions. It's still the same chart, it has not changed. You have here the dynamic resistances with the 21 daily, 4 hours, 1 hour. You have those monthly, weekly resistances, and we have the fib I just mentioned here. So we need to manage or to work on this move using all those things together, which is the monthly, weekly support resistances, which is the fib, the ABC, the retracement, and then we create a confluence. And you know here, that's what I just showed you, the 2140, the 2360, they are here. I just explained it's the same as those one we have there, those big mama we have here. So it's exactly the same thing. And here we have the 2140, which has another measurement from the other top there, monthly resistances. So that's our guideline for the ECB on Thursday tomorrow. And of course, on the downside, we have the same thing. We have some important fib here, the 1140 that we already brought through. We have this important monthly support here that has been holding the price. And of course, we have all the opposite fibs of what I just spoke about, especially this swing measurement, which if we would dip on the ECB, which is possible, everything is possible on the ECB. We have the 61.8 or the 38.2 because I had adjusted. So you have here the 38.2, you have the 50% and the 61.8 with a very big 1140. You see how this 1140 has been holding the price. So if we would dip hard on the ECB, of course, this level here at 0.581 or something like that would be of course reacting. The other thing you can use, if you like, to create a real confluence of a move, we can look at volumes, and if we use volumes here, we can use some volumes indicator, which is something I do quite often, as you know. Okay, we take this and we measure from here to there, and you will get here some interesting information about where has been the volume in this area. So we have a volume there, and you see that, for example, on the upside you have this big area here, which is at 0.851, which will for sure stop the price in this area. It's a very big volume block we have there. Where is the PBOC? So it's on the upside, you can see. So those blocks are very important there. You have this one here, and you see that's where we stopped, but it was not, it was existing at this time, so we stopped more or less in this area and spiked a little bit to the 2140. And on the downside, we have the same thing. We have this big block here, which will offer a reaction at 0600, 0600 up to 0580, which is the area we could spike a little bit and we would bounce from this area for sure. So that's another way, of course, another tool we use, even if in Forex many think that the volume is useless, it's not like in stock, of course, but we can learn to work with them, and it's very, very interesting to do so. And last but not the least, of course, you take your monthly chart and you can add here some important monthly support or resistances. The spikes here, I never use them. I only use the place where we have volume. For example, if I would look at this chart here, at those things here, I would use this volume area here for sure, and I will use this volume area here with that one. That's what I would draw if I would have to do it. It's already on my chart. You can see them on my chart most of the time. And if you go back here and we look on this on those levels, for sure there was a reaction on those levels somewhere. And look, those 2 monthly here, I will put them bigger if you want, but that's something I teach too in my mentorings. Very important to have a confluence of information that is giving you a certainty that something will be reactive. I'll put it bigger here. So when you see something like this, for example, we have created here a perfect, huge confluence. So you see this monthly level I just draw, see how we came perfectly there, see how we have been dancing around it, trying to pierce here, we could not after breaking lower, we have been holding under it and then we break through it, came back in it, and usually after that we should see a continuation, but the ECB can change the game. Here, same thing, which is a perfect example of how I trade using all my tools. You see this big 1140 fib on the complete swing up from 2021. You see those 2 big monthly support resistances, and you see how very nicely the price has been holding in so many occasions here. You can see there, you see very well, you see very well here. You see even here how we have been holding inside those things. You see perfectly here, here again. Here we have a small consolidation inside, but we have broken it on the upside, so we didn't came back there. And same thing there. You see we have been using this area a lot of times, and that has proven to be an interesting tool to be used. So they are not as precise as a fib can be, for example, so that's why they give you an idea and they tell you if you have a setup with your indicator, for example, there. And I can tell you there was a setup without even looking at it. I just grab my indicator, copy it and paste it here. Okay, my indicator is called price 6, and if you look, I don't look on the 1 hour, I use it on the 15 minutes. So when you came here, you see you had a long signal right on this monthly fib, it's a buy, boom, we went up, and that's how it works. So concerning the big event of Thursday, that's mostly the chart we have. We could add probably some fib and things like this. The other thing is those, what I call those order blocks here. Those things too are very important. They tell you the market maker has been building some position there. They have been accumulating some money here before going lower. Same thing here. So this is a perfect order block, and those things generally are a good reaction area. So if you draw a rectangle here and you extend it, in many cases you can see that we have had some volume in those areas. You can look at that on the 1 hour and see that. See here, all this accumulation has been staying inside this order block. So that's something else. Usually I like to use bigger time frame order blocks like weekly or dailies, but weekly is much better. Well, that's what I have seen, let's say. So we can look at that. The most accurate thing you can use on the upside too would be more monthly, for sure, some monthly support there. And you see, funny, nothing is random in this market. See how the volume of this candle, this monthly candle, stopped right on this monthly support. And of course, on the upside, we will have more there. So if we keep that, or if we take this one, okay. So that would be something interesting. So you see the actual monthly open is right on this monthly support resistances here, and you see how on this is daily candles. You see how the volume of the bodies has been really closing or opening right on that level in so many occasions. So that tells us why breaking this actual monthly open will be very important for the future, because it's a long-term monthly support resistances that has been providing very good reaction, and we need to break that one. Once we break this one, we can accelerate. And sometimes you listen me telling, okay, we will see an acceleration now because I know we have some momentum and I know we brought an important level and we have room to the next important level. Okay, so this is all for today. I hope that was helpful to show you how to work, how I do the work, the charting work there. We have the important level for Thursday on the downside here with very strong support resistances in this area. On the upside, same thing, which is the same chart I am posting every day. This one has the same information with a little bit more details. And another thing is this trend line we have here. So I will show it to you too, because it's something I like to have there, and I will I didn't paste the right thing. So let me take this, grab this trend line, and if we put it there, so you see the reason why I have this trend line here. It has moved, of course. Is this trend line is drawn like this, taking those two lows here. We came here, you see we went a little bit further, but not really lower. Okay, so you see we have 3 touch here, that's what I remembered. 1, 2, and 3 touch here, this trend line, which was an important trend line at this point of time. We bounced from it on the big move down, we bounce from it, and then we pierce it again. So for sure this trend line will give some reaction. So it's something important to keep on your chart, because on the way up, this thing will offer a reaction, if not exactly on the trend line, on the next small feed just above, if we pierce a little bit, but that's something we can see. So if we look now inside here, you see this is the touch I said. You see we came back here again, we bounce again here from it, and then we pierce it, came back above it, and then finally pierce it to go to this low we have there. So this area here, for example, if we would go strongly on the upside, we would pierce this thing, then we would finish here, and look, it's right on the 0833, 0840 area, which is again the same thing we have here. Okay, so that's why this 0840 is written so big here on my chart. Enjoy it. I hope we will have a great trading on Thursday. And if we dip, it will be a great option to get big longs on a dip. And if we fly, it will be a great option to bank some in this area, because we will see a pullback and then we will be able to buy again and go for the next leg on the upside.